Oh,
Yeah.
okay.
You're saying?
Yep. I was saying the talk of the town now is probably the alarming magical numbers that people have been
Yeah.
scared stiff. Yeah,
Is today's number announced yet?
I think so. I've received some.
Oh.
Yeah, I think it's 16,450 or something.
Oh no.
Oh, a number is just a number.
Sure.
Just I see Stephanie as well. Hi, Stephanie. Yeah.
Hello.
Stephanie is from Samantha. Yeah.
Hi, Stephanie.
She's the secretary of our northern branch.
Ooh.
Okay, we've got a few signing in. Last couple of minutes. I think, yeah, we'll give them another. Now it's exactly 3:30 on my clock, so maybe give them another few more minutes. Is that okay with you? Or?
Yeah, sure. Isn't it 3:34?
It says 3:34 on my phone, but it says 3:30 on my computer. So
Oh.
I don't know. I think it's probably closer to 3:34.
Yeah.
Well, we can start in a couple of minutes now.
Okay.
Yeah. Just give them a bit of time. Well, they can start posing the questions here. I mean, so we allow them to actually ask questions directly or
Yeah.
type in the questions via chat, right? I mean,
Yeah, so you can choose to raise your hand when you want to ask question, or if not, alternatively, you can just drop it in the Q&A section, and then we will answer all questions. So how it's going to work is it's 45 minutes of us, discussing, ECF, and Mr. Yo will be talking about something. We'll be briefing. Mr. Yo will do an introduction, and then I will talk about ECF, and then at the end of it, we will do a Q&A. You can choose to raise your hands to talk, or you can just type in a Q&A, and we will answer accordingly.
Yep. Sounds good. Yep. Yeah, it'll just be a very brief intro because I think the star attraction is yourself and basically to present to the audience what ECF is all about. Of course, I think ECF is not really that new. It's been around for a few years now, but there's still a lot of people who may not be entirely familiar with it. So I think it's good to reintroduce or at least to disseminate some accurate information to SMEs. And also I think times like this, it's always good to have alternative sources of funding. It's not just bank loans all the time, but to explore other options. Which is equity based, like ECF. So, well, we'll wait for you to have the honor of explaining more shortly. Yeah.
Xiang WC raised his or her hands earlier. Xiang, would you like to speak? Because I saw you raise your hands earlier.
Oh, is it? Okay, cool.
But Xiang, if you would like to speak, you can just raise your hands again, and then I will allow you to talk. Probably
No,
not.
we've got 17 now, so I guess. Yeah. Okay, maybe we should just kick it off because it's not fair to those who are on time. Yeah.
Oh, Xiang says he's just testing the button. All good.
Okay. So
all right.
let's start. Yeah. Okay. Well, very good afternoon to all of you who have, I guess, taken time to join us for this webinar where we'll be talking about ECF as an alternative source of funding for SMEs, another option. ECF, well, I think you all know, stands for equity crowdfunding. It's like I said just now during the our so-called banter. It's like it's not really something that is that new, but there's still a lot of SMEs who may not be entirely familiar with what ECF is all about. So I think this is a good opportune time for us to share with you all more about what ECF is all about. Hold on to your questions. So I think the format is that I will just be moderating the session. My name is Yeo Seng Hui. I'm the Honorary Secretary General of Samantha. Not to be, well, the thing is that when we call ourselves Small and Medium Enterprises Association, there are quite a few of them in town. So we rather be known as Samantha, which is the acronym, because otherwise there are other types of associations which also calls themselves Small and Medium Enterprises Association. So you know us by Samantha. So let me just do a quick introduction of who Samantha is. Let me just see. I'm trying to get my slide. Just a minute. Can you see my slide? Yeah. Okay. Okay, just a quick overview. You can see my slide, right? Yeah. Okay. Quick overview of Samantha. We are actually the oldest SME trade association in Malaysia. We've been around since 1986, which means it's about 35 or 3.5 decades now. Our objectives, as you can see from the slides, are basically to assist, promote SMEs, disseminate information, serve as an advocacy and a policy group to represent the interests of SMEs. And also we organize, conduct trade promotional activities, business matching. Before COVID, there were also exhibitions, trade fairs, inbound and outbound. So it's to summarize it, the 4 pillars will be basically policy consultation, market access, business applications, and capacity building. So that's basically what we do as an association. In terms of membership, we have about close to slightly over 2,000 members to date. Like I said, the composition of our members, initially when we started in '86, I was one of the founder members as well of Samantha. It was basically to help to promote and develop the supporting and ancillary industries who were servicing the MNC. So the bulk of our founding members at that time which came from those who were supporting the MNCs. But today, we have a whole diverse group of SMEs who have become our members. As you can see from the slide, it comprises of those in the metals, precision, F&B, retail, plastics, rubber, you name it, packaging. And in line with of course, the structure of Malaysia's GDP, now the services sector is becoming more and more important as well. So this is actually just a snapshot of the composition of our members. As I said earlier, we do organize international fairs. In fact, just recently we had a web event with a Korean group that was trying to look for some collaboration with Malaysian SMEs. So from time to time, if you become a member and if you go on our website and you check out our Facebook page, you'll be able to access some of these programs information, which will be disseminated to SMEs all over the country. Yeah. So that's in a nutshell who Samantha is. Like I said, we are the largest, and we also work very closely with SME 100, whereby we organized, co-organized some of these awards. As you can see from these photographs, various types of activities, locally, internationally. So these are basically programs and activities organized by Samantha, and especially during the first MCO last year, we actually try to get more information to get a feel of the pulse of SMEs, how they are coping, how they're handling this crisis. So we've done one survey last year, and also one survey in January this year, and then the most recent survey was done in June. So that was basically quite useful. We managed to poll the SMEs got feedback from a sample of them, more than 300 SMEs, and we were able to compile and analyze the information, and then actually forwarded this this useful feedback to the policymakers, both the state and federal government, and hopefully they will be able to take cognizance of our concerns, and then they will be able to come up with some programs, incentives, and policies to assist our SMEs in times of crisis like this. Okay, so just the next one is can you see this? Let's see. Okay, this is one of the goodies that we have actually mooted to the state government, as part and parcel of the promotion of digitalization for SMEs. We have managed to get the support of the Penang state government, and together with also Digital Penang, to launch this program called the BKK, the Bantuan Khas Kewangan, whereby a 1,000 ringgit grant will be given to each eligible SMEs, up to a total of 1,000 companies. So if you're Penang registered incorporated SME, and if you fulfill the criteria, you can apply online. You just go. It's quite a simple process. Just have to attach your SSM certificate to show proof that you are. You could be even a sole prop or partnership or Sindiran Berhad, but as long as you are part of, you're registered with one of the platform service providers. We've got about 10 of them listed. You can go to our website at www.samenta.org.my. I'll repeat it, www.samenta.org.my. You click on the link, and you'll be able to access the online forms for you to do your submission. So it's a very easy process. And this is a grant. It's not even a matching grant, it's just an outright grant. So if you have registered with any of these 10 platforms, it could start from even starting a domain page to a more sophisticated B2B platform and others. So you've got about 10 of them to choose from. And if you're part of this program, you'll be eligible for the grant. And the 1,000 ringgit will be credited to your company bank account. Yeah. Okay. So enough of this introduction. I'll go straight now to introducing our speaker. Our speaker for today is Miss Kelly Lee. Kelly is currently head of partnership with pitchIN, and pitchIN, as you know, is co-founded by Sam. I mean, I know Sam personally. And pitchIN is one of the leading ECF or equity crowdfunding platforms in the country. She's currently responsible for the strategic side of pitchIN. Before and prior to pitchIN, I think she was with Digital Penang. That's when I first met her as a senior digital transformation manager. And before that, she was involved in starting this courier company called pitchIN from ground zero. You people may have heard of pitchIN. I think you've seen their trucks flying around town. Yeah. And she's been building up partnerships with retail chains. So she was actually involved in growing pitchIN, and also as part of a fundraising exercise. I think they raised about 10 million USD in September 2019 from both Gobi Ventures and AirAsia. In terms of her earlier career, she was also with Magic, and she's always been passionate about helping to promote and be supporting and the startup scene from as early as 2015. So without further ado, let me hand over to Kelly to share with us what ECF is all about, the pluses and the constraints and all the the nooks and crooks of ECF. So over to you, Kelly. Yeah.
Hello. Thank you so much for your introduction, Mr. Yo. Hi, everyone. My name is Kelly, and I am the head of partnership of pitchIN. And today, it's an honor for me to speak to all of you today. Can all of you see my screen? Sorry. Can you all see my screen fine?
Yeah, we can. Yeah.
All right, so you
all
guys
good.
can
Yeah.
see this, right? Okay, perfect. So today's event, let's do a quick briefing. It will be 45-minute introduction to ECF and then a 50-minute Q&A. At the Q&A session, you can either raise your hands or you can just type in a Q&A section and we will answer accordingly. Okay, so a quick introduction about pitchIN, right? So pitchIN started its journey in crowdfunding. We started off as a reward crowdfunding platform in 2012. Reward crowdfunding is like Kickstarter, right? Where you say if you pledge on this in this project, they will get something in return, be it monetary or a product. In 2015, pitchIN applied and was successful in securing registration as a recognized market operator with the Security Commission of Malaysia in 2015. As of 2020, pitchIN is the leading equity crowdfunding platform in Malaysia. So just to show you a little bit of timeline and the growth of the company, in 2015, we received our license to operate. In 2019, we did 22 million revenue. So we raised a total of 22.7 revenue for companies on our platform. Last year was one of our best year. We did almost 60 million. And as of this year, I'm happy to announce that we have surpassed our revenue last year and we're only in July. So what does that entails, right? That just shows that equity crowdfunding is growing in Malaysia. And I've shown you some stats comparing to our neighboring country like Singapore and more established country like UK. You can see that in Malaysia in 2020, we only have 1.46 USD for global crowd. We are only at 1.46 USD per capita. Compared to Singapore in 2017, they did 32.99 USD per capita in terms of crowdfunding transaction volume. So there is so much more potential in Malaysia. So let me go straight to this. So what is ECF, right? Everyone's talking about it. What is ECF? ECF allows local incorporated companies to raise funding from their business, for the general public and investing community. So who oversees it? Equity crowdfunding is an extremely regulated area. It is overseen by the Securities Commission of Malaysia, and only registered platforms known as RMO, recognized market operator, are allowed to host companies on their platform to raise funding from their public. So how many market players are there in Malaysia? There is, in 2015, there were 6, 2018, there is 1, and 2019, there is 3. So all these are publicly available information on the Security Commission's website. So anyone else that is not on here is not recognized by the SC. So the opportunity, why ECF? Well, ECF turns customer, client, and user and partners to invest in your company. So that there is this misconception that, you either go the ECF route, you go the VC route, or you go, the loan route. It doesn't have to be like that. It could be a merger. So even on our platform as well, sometimes when we raise a campaign, we also have angel investor, sophisticated investor that raise together with us with the startup, right? So ECF is about democratizing fundraising and investing. We also want to provide opportunity to other people who may not have exposure to of such deals. So I'm going to explain to you a little bit of the basics of ECF. So who are considered as investor? Investors refer to either individuals or companies that registered themselves as investor in a RMO. I will go further in depth details in a type of investor. Issuers, when we say issuers, we refer to the companies that are fundraising on a registered recognized market operator. RMO or recognized market operators are platforms that have been registered with the Securities Commission of Malaysia. So if I were to register myself on, let's say, any of the recognized platform, I will be considered an investor. And if you were to register to run a campaign on, let's say, any of the recognized platform, you will be considered an issuer. So these are the categories on investor. They are retail, sophisticated investor, and angel. So sophisticated investors are people that runs VCs, management firm, private equity corporation. They are considered as sophisticated investor. And for angel are considered as a tax resident in Malaysia and whose total net personal assets exceeds 3 million or its equivalent in foreign currency. Or gross total annual income is not less than 180,000, or jointly with his or her spouse has a gross total annual income exceeding 250,000. And anyone else that is not within the sophisticated investor or angel falls within retail investor. So for this on the platform, when you register to any of the recognized market operator platform, you have to self-declare. This is not something that we will check. So it's up to them to declare. So I will be considered as a retail investor. Is there any limitation to how much I can invest? Yes. So this is the guideline that is created by the SEs. A retailer can do a maximum of 5,000 per issuer with a total amount of not more than 50,000 within a 12-month period. And for angel, it is a maximum of 500,000 within a 12-month period. And sophisticated investor, there is no restriction on investment amount. So all these are self-declared and we don't check, right? So this is all up to the retail, it's all up to the investor to self-declare and manage on themselves. There is also investor protection. So what is investor protection? So the SE came out with a regulation which states that up until the campaign ends plus 6 days of cooling period, I myself as an investor can pull out from the investment within this period, right? So the campaign plus 6 days is considered as investor protection. And if you want to pull out, you can pull out. There is no restriction to that. But after 6 days of cooling period, you're not allowed to pull out your investment. Another disclosure, if your company is raising more than 500,000 ringgit, you will have to disclose your audited financial statement, regardless if you have been in operation or not. If you're less than 500,000, their management account will suffice. So Zhen Feng Chan has a question on the group, on the chat. He asked, who is eligible to do crowdfunding? Do you need to have traction revenue in order to do crowdfunding? No, you don't have to have traction, but you still need to be audited. I will explain more further on who is eligible and so on.
Sorry, Kelly, maybe it's better for you to finish your presentation, and then we'll take the questions from the chat. It'll be easier that way. Otherwise, it's a bit interruptive, I think. Yeah.
Okay, sure. Yeah. So only locally incorporated companies can be listed on our ECF platform. ECF platform operates a mandate to perform due diligence and compliance on the company's fundraising. This includes the people running the company and the business proposition of the issuer. Only locally incorporated Sdn Bhd and LP companies can raise on ECF. Companies cannot have more than paid out capital of more than 10 million ringgit. So what are the fundraising limit on ECF? Company can raise up to 10 million, but according to SC, they are thinking of changing it to 20 million. If you choose to go on the ECF route, you can choose to raise at one go 10 million, or you can do it, cumulatively. So there's one interesting fact about ECF is that it's an all or nothing concept. You have to hit your minimum funding target. If you do not meet your minimum funding target, all the funds that was invested by the investor will be returned to the investor if you do not meet your minimum funding target. So it builds trust, right? So what will happen is when all the funds, let's say when I run a campaign on issuer and I invest in pitchIN, pitchIN will hold that money on trust and for me until the end of the 6 days until the end of the campaign, plus another 6 business days of cooling period. Shareholders. So as we know in Sdn Bhd company, there can only be 50 shareholder, right? But if the ECF company goes well and there is more than 100 investor, we will put them into a nominee company. I will explain further in what a nominee company is after this. Next, shares. What kind of share do you offer on ECF? It's up to you as a company if you want to raise fund. There is ordinary shares or there is also a preference share. So I want to talk a little bit more on shares, right? So how many types are there? So there's 2 general types. There's ordinary and there is, preference share. So people will go into about, okay, so if I were to give my shares, do they get to vote? It's up to you to decide. If you offer ordinary share, they will be able to vote. But if you order preference share and you limit their voting rights, they don't get to vote. So which one should you offer is completely up to you. If you want to go more in depth in the terms of what type of shares, the pros and cons, today I'll explain a little bit just the general gist and not too much in depth, because it's quite a lot. Because there's ordinary shares, there's preference shares, there's redeemable preference shares, there's redeemable convertible preference shares, there's irredeemable convertible preference shares, and redeemable cumulative convertible preference shares. There's so many types of shares, but in general, there's two types: ordinary and preference. So in terms of I'm going to go into a brief description of both of them. Ordinary shares is the most common type of shares issued. Preference shares is, by definition, a preference share is a share by whatever name called, which does not entitle the holder to a right to vote or participate beyond a specific amount in distribution of the dividend, redemption, or winding up. Preference shares can have both equity and debt-like characteristics, favored by investors who have different priorities and interests to safeguard. So when you list on ECF platform, the investor don't get to pick they want ordinary share or preference share. It's up to you to pitch to them on what shares you are trying to offer. So when would you offer ordinary share? It's only suitable for parties that wish to exert some control. You know, they want to vote, they want to have say in a company, or participate in earnings and growth of the company. For preference share, however, it's a powerful investment tool for parties with the following objective and requirement. 1, investors that do not require voting rights and involvement in management company. 2, investors opting for medium risk and return. 3rd, investment who prefer a hybrid debt and equity investment exposure. 3rd part, constitution. The term of issue of shares need not be expressed set out in a company's constitution unless different class of ordinary shares are to be created. However, for the preference share, the law requires the right of preference shares must be expressly set out in the constitution. Apart from rights expressly given in a constitution, preference shareholders have no additional right. A company may not allot any preference shares or convert any issue shares into preference shares unless there is a set out in its constitution the rights of the holder of those shares. So for preference shares, you can set out in respect to, repayment of capital, participation in surplus assets and profit, cumulative or non-cumulative dividend, voting, and priority of payment of capital and dividend in relation to other shares or other classes of preference shares. So the most common type of shares that I see in ECF platform is actually preference share. So if you have more questions regarding ordinary and preference share, we can bring this discussion further. But the highlight of this is ordinary share have voting right. But when it comes to preference share, it's up to you to set if they have or do not have voting right shares. So who cannot raise via equity crowdfunding? 1, commercially or financially complex structures, such as investment fund company or financial institution. 2nd, public listed companies and their subsidiary Amber Heart registered company. Unlisted Berhad companies may be allowed later, but currently it is not. 3rd, companies other than a micro fund that propose to use the funds raised to provide loans or make investment in other entities. And lastly, companies with no specific business plan or its business plan is to merge or acquire an unidentified entity. So here are some statistics to date on pitchIN. This is available publicly. I will share the link to all of you if you're interested. As of 2020, there are 15 seed companies seed stage that raise on pitchIN. 4 venture stage, 7 in growth stage, and 10 that are well established. Between tech and non-tech, this is the question that most people ask. So is it just tech company that can raise on ECF? That is not true. As of our data in 2020, 24 of the companies that successfully raised are tech companies and 12 are non-technology company. So as you can see about deal size here, right here, from 2016 to 2020, the deal size has significantly increased. We see more deal size that are more than 3 million. Number of investor per deal, we can see that there is more smaller scale. There are more higher value investor as of recent years. Last year we raised a total of 59.5 million. There was a total of 36 deals. It was 19 more than last year. Average raise was 1.65 million. The average number of investor is 49. Average of years of operation is 4 to 5 years. Average investment amount per investment made was increased by 138% compared to last year. So let's talk about investor in pitchIN. So total number of investors made on pitchIN to date since operation is 4,568. Total investment alone made in 2020 was 1,738. So who are the investors? So the investors come from 30 countries, 97% are local investors and 3% are foreign investor. So I would like to highlight that foreign investor can invest in our ECF, in Malaysian company that are running campaign on ECF. Out of all the investors that invested last year, 33% are angel investors, 49% retail investors, and 18% are sophisticated investors. So as spoken earlier, what are considered as sophisticated investors? That includes VC, family funds. There are people that are not angel or retail. 69% are male, 30% are female, and 1% are from institution. So how active are the investors, right? So there are number of investors who made more than 10 investment are 90. Number of investors who did between 5 to 9 investments are 52. And number of investors who did 2 to 4 investments are about 397. To date, fundraising campaign statistic. Total number listed company on pitchIN is 123. Out of that number, 113 are successful campaign. 3 are ongoing. 6 has re-strategized and decided to drop out, and 1 has failed. So that has made our success rate on pitchIN to be 99%. So how to start a campaign on pitchIN? There are 3 things that we have summarized to. So I want to disclaim that raising on ECF, it's not too much different in terms of the format when you raise from VC. You can't just go on there and be like, hi guys, I want money, please raise to me. You still need to have a strong team, you need to have market, you need to have traction, and most importantly, the company has to be ready and prepared, time-wise, resource-wise, with strong narrative. It's not too much different from pitching to VC. You are also you're kind of like pitching. It's kind of like pitching to VC. They're less harsh, but it's pretty much similar. So how are companies scored? So if you are familiar with the startup seed or how people pitch to VC, it's pretty much similar. I think it's slightly easier than loan, but these are the 12 things that companies are being scored. 1, business setup. How was the business setup? 2, problem that the business is addressing. If you're not addressing a real problem, you're less likely to get funded. 3, clear product placing. 4, market size and competition. 5, business model. 6, go-to-market strategy. 7, revenue model and generation. 8, growth potential and strategy post-fundraising. 9, valuation. 10, what are the ROI and exit for investor? 11, founders and team. 12, overall impression. So if you're going to list on pitchIN, this is basically how we will score you and how we will advise you accordingly. Like, okay, this is what you need, this is where you need, because all this information are needed to display on our platform. So I'm going to explain a little bit in terms of the process. So there's 3 stages to it. There's pre-live, there's live, and there's post-live. What is pre-live? Okay, so application pre-live is when you register with pitchIN, and then we advise accordingly if you should go live, and we do due diligence. So the first step would be application and agreement. Once you express interest to us, we will then go through your company and we will decide if you can go on board onto the platform. We cannot advise in terms of valuation. We cannot advise in terms of anything else about the business, but we can tell you from our experience if this business might work or might not. Second part, due diligence and compliance and prep to go live. pitchIN to conduct due diligence and compliance on company while prepping to go pre-live. Complete business info content, offer document, and campaign page. So what is pre-live? So pre-live is more like a teaser. Before a movie is announced, they will do some marketing campaign. Very similar. The offer has been finalized. So we will offer like, oh, this is what we're offering. If you submit or you express interest now, you will get more shares. So let's say if you were to buy 10 lot now, you'll get 2% extra. So all these are the campaigns and marketing that we run and shout to get leads for people. And the pre-live campaign usually goes for about 4 to 6 weeks. So when you go live, so what happens? So offer is finalized, it's public information, campaign page open. Then this is when we run the campaign. So the campaign can run between 30, 45, or 60 days. The campaign can also be extended. But during the live period, you will also decide what is your minimum funding target and what is the target you're looking for. If you don't hit your minimum target, you don't hit your minimum funding target, the campaign is considered to be failed. After the campaign is successful and live, we will move to post-live. So what happens in post-live? After the campaign ends plus 6 cooling off business days, we will wire the fund to the company, and then digital cert will be released. So what is digital cert? So pitchIN will liaise with issuers, co-site or digital cert to email all this cert to the investor. If there is more than 50 investor that campaign, we will then suggest to use nominee share. And then most importantly, at the end, you will have to report to the investor, be it annually, quarterly, or half a year. It's up to you, but you have to report at least once a year to the investors. Next, so what is in the business info and campaign page? So there are 16 that we have summarized. 1, the summary. What are you solving? What you're looking for? 2, the problem you're trying to fix. 3, what is the solution that you have? 4, what is your product? 5, what is your traction? 6, who are your customers? 7, your business model. 8, how big is your market? 9, competition. 10, funding. 11, funding utilization. 12, vision. 13, investors. 14, who are the founders? 15, who are the teams? And 16, the press coverage. So we noticed that when the problem statement is a strong one, it is most likely to go beyond the minimum funding target. What are the possible exits? Dividend, buyback, acquisition, buyout, IPO, and secondary market. I know we've been talking about the secondary market a lot. So what is the secondary market? Secondary market is when you buy, let's say, I were to buy Angkasa X shares right now on pitchIN, and secondary market means that I can trade that shares or I can sell that shares to someone else that wants to buy it on the platform. Unfortunately, we are still pending for SC. We cannot launch this. Anything that we do, anything we want to launch, we have to get approval from SC. So in terms of buyout or buyback, how common is that? Well, we have, I think, MyCash online. Their investor actually buy out. We have a few that wants to buy out as well, but we are not gonna disclose too much in terms of who are deciding to buy out. In terms of IPO, there's no company that has gone IPO from ECF, but we have companies that have managed to raise from VCs after their ECF fundraising. So what are the pros and cons of raising on ECF? 1, I'm going to talk about the pros. You grow as you fundraise. 2nd, you're in control. So ECF is a little bit more structured. It's less heartbreaking than raising from a VC because everything is predicted, everything's structured. It's usually 2 to 3 months, depending how long is your fundraise. 3, you get to gain exposure. How I like to think of this is you raise from your audience, right? You raise from your users, family and friends, people that already are using your product. So that can also gain more exposure. It's a straightforward pitching process. Everything is planned. You know who you're pitching to, you know how it works, and social proof. People know that you're out there. Unfortunately, one of the biggest cons that people talk about is that once you raise on ECF, everyone will know you're raising. Unlike raising from VC or bank loans, people don't really know, or even grants, right? People don't know you're applying it. You don't have to expose your whole business plan. 2nd, commission on raised capital. So pitchIN charge a fee for all successful campaign. 3rd is if you are unsuccessful, it is public information. Everyone is out there. And of course, lastly, you are obligated to report to your shareholder, be it once a year, twice a year, or 3 times a year. So how much is it to list on pitchIN? The onboarding fee is 1,688. Success fee is 5%. Nominee fee is where when you have more than 50 shareholders or 50 investors, pitchIN will help you restructure it into a nominee shares where they all will go into nominee. And it is free for the first year, but 3,888 annually. So I wanted to share a few case study. First, I would like to talk about Signature Market. So they managed to raise 1.5 million from 161 investors. They raised 1.1 million in 2 weeks doing pre-live. I want to talk about Signature Market because when he first started, I've known him through Magic. He was part of one of the GAP participant, was that he couldn't raise any fund from VC. He was in fact struggling to raise because he was just then an e-commerce platform, right? He didn't have much traction and he was finding it really hard to raise, but he did it really successfully on ECF. And he recently also just raised from RHL Venture. So my point is that it's not either or. Just because you raise from VC doesn't mean ECF is not an option for you. It's just depending on your timing and dependent on what you need as a company at that time. Our second biggest, most popular campaign is Oxwhite. Oxwhite raised 5 million from 485 investor. They raised in less. The raise was in less than 2 weeks. So they did about a marketing campaign pre-live for about 2 weeks. So because of their consistent marketing, they have a mix of retail, angel, sophisticated, and VCs as well. Next, I want to talk about La Pasar. So La Pasar is the biggest fundraise on ECF history in Malaysia. They raised 7.5 million from 18 investors. They had a mix of retail, but mostly VCs. It's currently the largest fundraise on ECF. And I also want to talk about, so we talk about so many people raising millions and millions, but that's not necessarily the case for ECF. We have ClusterCube that was funded in April 2019. They were only asking for 50K, and the number was quickly matched with by 2 investors. So what is the business model? The business model is to provide an ERP system for micro SMEs, which contain modules such as e-commerce, inventory, affiliate, microsite, delivery, and payment. It may seem like you have to be a tech company or some sort of big presence to raise on ECF. I also want to share about F&B. We have Ying Sourdough. They raised in April 2020. They raised about 1.139 million from 59 investors. So Ying Sourdough Bakery specializes in affordable artisanal sourdough bread and other artisanal foods such as jams and sausages. In fact, most of their investors are actually their own customers that really, really enjoy their product. Another one is Love 18C chocolate. It's a Malaysian artisanal chocolate. They raised about 302,000 from 12 investors. Yeah. So I'm ready for the Q&A.
Okay, good. Well, let's tackle the some of the questions that have already been posed. So yeah. Shall we start with the let's see, the first one. I think you've already answered about the traction and revenue, because when you were showing the slides, maybe you just want to elaborate a little bit on that. I think well, whether they need traction and revenue to participate in an ECF fundraising exercise. Yeah.
Okay. Where is that question again? Sorry.
In the chat group. Yeah.
Okay.
From Chan Zeng Feng. Yeah.
Okay. So the question is, who is eligible to do crowdfunding? Do you need to have traction revenue in order to do crowdfunding? Everyone, as I mentioned, as long as you're a registered company in Malaysia that is Sendirian Berhad and LLP, you have a clear business model, you are eligible to raise for crowdfunding. Do you need traction or revenue in order to do crowdfunding? No, you don't need to have traction or revenue, but you need to have a clear business plan on how you want to do it, what is the purpose of this. And I want to share my screen again, sorry. Everyone see my screen. Okay. Let's go back to this one. ClusterCubes, when they raised for this, they didn't really even have any product or revenue. It was just a concept. And I think they did quite well. And of course, the fund they were asking for is not too much, right? And they're still in business as of today. So you don't need to have traction or revenue. It is advised that you have some level of traction because it provides security for investors, right? But I think if you don't have traction and you don't have a business model, it will be really, really hard to raise.
Yeah, I think I just want to add that if you have seen the slide presentation from Kelly earlier, I think the majority of the companies that have successfully raised usually have about 2-3 years of operations track record. So it's not so much for, I think, depending on which stage of business it's at. Of course, it doesn't preclude startups like in the case of Cluster Cubes or whatever. But I think looking at the profile, it'll probably be more for companies who have already a certain number of years of operation, with some traction, revenue. It's easier for investors to evaluate because angel for ECF, the investors, as she has rightly pointed out, of course you have angel investors, but the bulk of them are retail investors. And these people do not have that kind of risk appetite to be going into like the early startups for most of them. So that's why I think majority of them are still looking at companies which has some traction, some revenue. That's why your average period is usually about 2 to 3 years, right? From your slides earlier, or 3 to 4 years or something. Yeah. Okay, and I think you've got, let's see, the next question here. Okay, would it be more attractive to offer ordinary shares to investors? Okay, let me answer that. I actually do talk about exit strategies in M-Band's workshops as well, so I'm quite familiar with some of these things, But okay, it depends on how you look at it. If you are, whether from the point of view of an investor or that of an issuer, if you're an issuer, if you offer ordinary shares, then the pros and cons is that for ordinary shares, they'll be with you forever unless they sell the shares to somebody else or you buy back shares from them. But if it's a preferred redeemable share, that means after a certain point in time, an agreed upon duration, that means they can actually redeem the shares. You can redeem the shares from the investors. And as what Kelly has pointed out, for ordinary shares, of course, you've got voting rights. Usually for pref shares, you don't normally, So, and in terms of ranking, of course, preference shares has got a higher ranking compared to ordinary shares. So when it comes to liquidation, pref shareholders has priority. So it depends on. So you have to be looking at it from the point of view of whether you would want to have these people as your so-called more permanent shareholders. Then you give them ordinary shares. So if it is just purely for funding, and if you would like to redeem, then you may want to offer the redeemable preference option, whereby, let's say, in 3 years' time or 4 years' time or whatever, you can actually redeem the shares. So it depends on what you're looking at, But I wouldn't probably be so eager to offer ordinary shares at early stage, But so I guess it depends. I hope I answered your question, Chili.
To add on that, I think a lot of these investors, like especially on ECF, they're not looking to help you grow your business, right? They're looking for returns. So
right.
In terms of what's more attractive, I would think it's preference shares as a retail investor. I don't really care how you run your business unless I'm really passionate about it. I'm like, yes, I want to be. So people that would prefer ordinary shares are usually VCs, right? People that has connection, that they know what to do. They think this is the best way. But for at least the retail investor, they don't want to have a say in your company. They just want to
even for VCs those days when I was with a VC, we normally go in via an RCPS, which is redeemable convertible preference share. So we want to hedge it by having the preferred option, which is ranked higher, and then you have the convertibility option, so that in case if the company is doing well, you can convert them into ordinary shares prior to IPO, that kind of thing. So you get the best of both worlds for VCs, but they have that bargaining power. So let's move on to any other questions, which I think there's one in the Q&A. What is classified as a tech company? In this day and age, most companies are transforming, incorporating digital components. So unless it's a brick and mortar, would every other businesses be considered tech?
Yeah, I'm going to answer on that.
Yeah,
Just so
go ahead.
like Signature Market, we wouldn't consider it as a tech company. It's an e-commerce platform, yes, but it's a product. The product itself is not tech, so we wouldn't consider it as a tech company. As long as the product is a tech solution, we will consider that as a tech company.
Yep. Yeah, I think here I will just angle it differently. Is that if you're looking at fundraising, yes, I think Kelly also has shown that there's also a significant percentage of non-tech. So I think we should not be overly concerned about the definition of tech or non-tech here. Is that ECF platform, accords the opportunity for SMEs to raise funds, regardless of whether, like you see, Yin Sourdough is not a tech company; it's just basically a bakery. I know the owners of Yin Sourdough. So, and the chocolate company is also not a tech company. So. Ox White is also not a tech company. It's basically, selling apparel. So I think options are there. Yeah.
Yeah.
So we don't get too pigeonhole into definition. So as long as if you've got a viable business proposition, as what you've highlighted just now, you address those issues, your salient points. And if it's attractive enough to investors, hey, they'll put money in.
Yeah.
Because this is an alternative investment for them, right? Yeah. Okay. I think we've got more questions. Another one coming up. If we put a lower target fund, are we able to participate again in, say, 1 year's time? I think that's up your alley, so you should be able to answer that straightforward question.
Yeah. So as long as you don't hit your 10 million limit, you can raise as many times as you want until you hit your 10 million limit.
Yeah, I think just to add on a bit, like what she says is that because there's a minimum target amount, so you also want to be a bit conservative in a way, because you don't have to set your minimum too high, otherwise then it may not be a successful campaign, right? If you set it too high, you can always go beyond the minimum. Yeah, correct.
I also want to add that ECF is not as as easy as it looks, right? Because what you see as an investor is just front end, the campaign is live, but the work behind is you need to reach out to people and say, hey, I'm raising fund. Hey, would you be interested? It's not easy as you might think. It's quite a lot of work, but I feel like in terms of funding option, you have a little bit more control because you get to gauge your market first. You're like, hey, I'm raising a fund. Would you be interested? You get to have some leads and you get to use the power of the crowd.
Any other questions? Okay. Yeah, feel free to shoot off your questions, or you can also raise your hands if you want to ask, if you don't want to type in.
Yeah.
But while waiting for the questions to come in, I just want to maybe highlight a bit about the pros and cons, further add to what Kelly has mentioned. I always see ECF. I was very happy when SC introduced ECF into the funding, scene for Malaysian SME, because to me it's another alternative option. Bear in mind that especially times like this, if you're an SME, the pros and cons. One is that, of course, with ECF, you're actually strengthening your balance sheet because it's an equity. Of course, it can also be considered a hybrid or a debt, depending on whether it's completely redeemable or whether it's you have a convertible option. But it's still a pseudo instrument, so it's not pure debt, like a bank loan. So if you want to strengthen your balance sheet, whether you bring in ordinary shareholders or preferred, then it actually helps to improve your gearing ratio, because you see, that's one. Two is because it's collateral free, because unlike a bank loan where in most cases you will have to provide collateral. So in this case, you do not have to, because they're coming in as equity investors. So these are the pluses. In addition to that, she has also mentioned that of course, pros and cons. If you're successfully able to raise, you get the publicity and the awareness. So actually, your investors, because you could be attracting 100 investors or more, depending, and they could be your consumers as well. So you're actually reaching out to these people. And for those companies that are a bit bigger, slightly bigger, ECF fundraising could be also part of that journey, like as a pre-IPO kind of financing, like you're testing waters to get certain kinds of valuation. At the same time, you are also able to get your public shareholders spread to a certain extent. So because now you've got these people investing in your company, so eventually when you go public, these people are part of your public shareholder spread as well. So because these are all the retail investors. I'm talking about the smaller ones, not the sizable investors. So these are some of the the pros. The other thing is, of course, you only pay dividends from profits. So they are actually part of your so-called investors entrepreneurial kind of profile. That means like if the company is not making a profit, you do not pay dividends to them. So they are taking that calculated risk. Unlike a loan, whereby whether you make money or not, you still have to settle your interest. And then you're going to be paying your term loan on a regular basis, right? In terms of your installments. So in terms of cash flow, you have to be paying that. As opposed to if it's a redeemable preference share, it's a bullet payment, when you redeem it at a certain point in time. So in most cases, you do not have to be sacrificing your cash flow that much. But those are some of the pros. Of course, there are cons as well, like she's mentioned, like the reporting, probably the dividend rate that you offer right now, because there are some soft loans available at more attractive rates. So for some people, they may say, hey, I'll go for debt, but it's something for you to think about. It's like it depends, like what she correctly pointed out, it depends on which stage of growth your company is at. If you've already geared up to the max, then you may also want to consider that equity option. Yeah, so it's like we're not saying that ECF is not a substitute for your debt, but it's another alternative or option for you to raise funds, which to me is I always love what Jim Collins says is like the theory of the and. So as long as you have more options, it's fantastic, So don't limit yourself. So you can still go for your loans if you think that it's a cheaper option. You have your collateral, and you can secure additional funding. Go ahead, but just bear in mind that you also have another option. Yeah.
I think we have another question from Chile.
Okay, another one. I've witnessed a prop tech fundraising competition, and many of the people how they will use the funds as X% for marketing and the rest for R&D. Is that usually true, or is it just a general statement to not reveal too much information?
This is a tricky one, isn't it?
Well, I think this one, there's no hard and fast, the answer to this, because it's just that when you're raising funds, of course, they will say that, like in any fundraising exercise, you're going to indicate the utilization of the funds, right? Whether it's X%, Y%, I don't think there's any hard and fast rule to determine how many percent goes to which particular area of the business. You have got any further comments on this?
So usually it's true, as when they build the plan, they strategize, this is something they want to do, but in terms if they can do it by the time they reaches that stage is a completely different question, right? But to me, at least they have a goal, right? They want to raise this fund, be it for growth, they want to scale, or they'd be like, I need more money for R&D, and this is the purpose of the fund. I think usually it's true. Let's give everyone the benefit of the doubt, because I don't think anyone will raise fund, especially on ECF, to say, I want to use money for this, but they don't use it for that.
As long as you don't say that you want to raise money to buy a new Merc or something. Then
I need a penthouse for my office.
Okay. Okay, any more questions? Feel free, please, because this is or you can even comment. It's actually, to me, it's like we welcome feedback, comments. If you've got an alternative view, go ahead. We can always discuss, share, learn from each other. I think the good thing also about some people see the reporting as a con, the regular reporting, but to me, I think it can also be a good thing, because it actually encourages you, or makes you gear yourself to become to operate with better corporate governance, in a way, because it's like you have to be fair to the shareholders. Like when you bring in external shareholders, if you imagine yourself as an investor, you would be expecting financial information reports, on a regular basis, whether it's half yearly or quarterly or whatever that the duration that is agreed upon. So to me that's just fair. Otherwise, if it is your own family business, of course you can have 3 sets of books and stuff like that. Nobody cares. But when you have external parties as your investors, I think there must be certain responsibilities. So this is where the corporate governance comes into the picture, and I think you can't run away from that, because if you're not prepared to do that, then sorry, I don't think ECF is the right platform for you, right?
I think for ECF, it's easier to raise funds because the check size is smaller, but you have more people to be responsible. There's no free money in this world. Even with bank, you have to pay it back.
Yeah. The good thing about ECF is this. I think like what Kelly just mentioned is that because the ticket size are usually smaller, so you see, like even though for slightly higher risk investments, like for the individual investor, it's not a huge amount. It could be just 10,000, 15,000, because you start off with, they can, even for retail investors, they can go, 5,000, right? Basically, yeah. So, imagine, like, let's say for these people to dabble into this kind of investments, it's not a huge risk. So they don't mind putting in some money. It's like, okay, I'm diversifying my investment portfolio. So let me put 10,000 into company A, another 10,000 in company B. So even if, let's say, assuming it tanks, it's only 10,000, it's not like I'm not putting in my entire life savings into this investment, but if you see the strength of the aggregation is that for an SME issuer, if you can get 100 people putting in, or say 20 people putting in 10,000, you're able to raise 200,000, right? So it's like, it's still a sizable amount of money. Like, if you're raising 500,000 or a million plus, So this is something for you to think about. Again, like I said, just different options. Any more questions?
And now you have 20 more people talking about your business for you.
Exactly.
With their friends and family, so it just starts growing and growing.
Yeah. But of course, if you are issuing ordinary shares, or if you have the convertible option, then there's also the dilution factor, which I think people must be aware of. But again, you see, like, no such thing as a free lunch in this world.
Unless it's from your father and mother. Maybe that's different.
Yeah. Even then, maybe not no free lunch also. But the dilution part, that's why you see, if you're starting at an ECF stage, you're not raising such a big amount yet. So it's okay, because you won't be getting such high valuations at the early stage. So you don't dilute that much. So, like what Kelly pointed out, because you can start off with ECF, and then further down the road, you may then be going to VCs. By then your valuation will be higher. So it could be a combination of that. Doesn't mean that it has to be ECF all the time, because the VCs could come in and actually buy out some of the ECF investors as well. Like it's what you've just pointed out, just not to buy out, propositions.
And I think in the ECF history of Malaysia, there are 3 cases where it was publicly announced that the VCs buy back all their shares. 3, and one of them was listed on pitchIN. It's called My Cash online.
Oh, okay, good. Yeah, I'm waiting. I can't wait to see the first ECF invested company that's gone public or something.
We're all waiting. So, Mr. Yu, I want to before we wrap this up, I want to pick your brain and find your opinion on the secondary market. Do you think once the secondary market is approved by SE, it will bring the potential of ECF to the next level?
Personally, I think so, because at least there is, again, to me, anything that adds a further dimension or another option. Because you see, if you imagine today I'm an ECF investor, the biggest constraint is always liquidity, right? Because until the redemption period expires, otherwise I'm not going to be able to exit. Assuming, let's say, if I need to liquidate my investments in between, assuming let's say we just take if it's just say 3-year time frame, or I mean, before I can actually get my preference shares redeemed, assuming that's the agreed tenor. But along the way, if I would like to liquidate without a secondary market, I can't. So I just have to hold on to my investment until year 3, and then the company will be obligated to redeem the shares from me. I mean, but if you have a secondary market now, then it opens up a totally new world, right? I mean, because then there could be, like, 1 year down the road, although the company is doing well, but maybe I would like to exit at that point in time. Maybe I need the funds or whatever. I mean, and so there could be interested parties in the secondary market who would like to buy over the shares. So I think that definitely would give it a boost. I think. I mean, this is my view.
Interesting.
Any other questions?
Yeah. Is there any more questions before we wrap things up? I think we're 7 minutes behind. Any other question? Anybody want to raise their hands and ask question and share their opinion?
Yeah, make full use of the opportunity. It's all given free now. Otherwise, after this, you probably have to pay for it. Just kidding. Yep. Yeah. Just another reminder for those of you who have not applied for the BKK grant. 1,000 ringgit there for each eligible SME. Please go to our www.samantha.org.my website, and you can actually get all the details there. Don't miss out on this opportunity. I mean, 1,000 may not be a huge amount, but it's not peanuts either in times like this. So why not make full use of it?
Yeah.
Get the grant, and it will help you in your digitalization program in some ways, a small way. Or even if you don't need it, spread the word around to your associates, your friends who are micro enterprises or small businesses, and they may be able to benefit from this BKK grant. Yeah. Okay. Let's see. There's another question. Other than the secondary market and shares buyback, is there any other ways investors can exit? You want to take that first?
Usually it's just two ways: secondary or dividend, buyback, buyout, acquisition. These are the usual methods. These are the usual possible exits.
Yeah. Then of course they sometimes of course it depends, unless they do a trade sale, or if it's like, let's say if the company sells the entire business to another corporate entity, that could then also be let's say for an opportunity for you to exit if you're one of the shareholders holding pref shares in there. So this would be part of a trade sale. I mean,
So Ian asked another question: can investors sell their shares with approval from the company?
Can investors sell with approval or without the approval?
With approval. I think it depends on the type of shares you hold.
It depends on the shareholders agreement that's structured, because of course certain most of the entrepreneurs who want to have right of first refusal, preemptive rights, those kind of things, so they wouldn't want you to be selling to a third party without offering it to them first, that kind of stuff. I mean, so I think those would be the usual clauses that they would put in the shareholders agreement, but I think I think,
which is why I'm really looking forward to the secondary market, right?
Yes, then it will be easier, because then you can just sell it without having to get any clearance from the
and it will be a free market. It's really ready buyer, ready seller. There's no you can't just make this up. It's public information. Everything is out there, and
true. And also the market prices will be determined by the prices will be determined by the market.
Correct. So I'm really looking forward to that, and I hope SC will approve that ASAP.
Yep. Okay. Well, we're almost there, right? In terms of our time, or can
anybody has any last question before we end this session?
Yeah. Okay, going once, twice. Okay.
Right.
Yeah. Before we conclude, once again, Samantha would like to thank, of course, and pitchIN would like to thank the participants for signing up. We hope you have enjoyed the session. We hope you've actually benefited from the information, and also the sharing from Kelly. This will be useful information. If you need to know more, you can always contact her. I mean, through pitchIN. I mean, let's say for those who are either interested in investing or even in issuing, shares as a fundraiser. Okay, let's wrap up this afternoon's session. Maybe I should just type in Samantha's website. If you can just help me to key in Samantha's website.
Yeah, I did earlier. Let me just.
Thanks.
Yeah.
Okay.
So Samantha website is
www.samantha.org.my. Yeah, thanks.
So I dropped my email and LinkedIn. So if you're interested to connect or speak more, feel free to reach out to me. And don't forget the 1,000 ringgit grant.
Yeah. Okay, so thank you very much. I hope you all have enjoyed the session. It's getting to be close to 5 o'clock. But nowadays, with the working at home or working from home, you don't really realize that it's a weekend anymore. Or
There's not much difference.
So, okay, stay safe, take care, and have a good weekend. And all the best to you guys. So,
thank you, everyone.
Have
a nice day. TGIF.
Yes.
Bye-bye.
Thanks, Kelly. Yeah, take care. Bye. Yeah.